Hello, everyone. I hope you are all enjoying the long Labor Day weekend. We're going to go ahead and start it off with the NASDAQ, which had a basically pretty weak session overall on Friday. It was also a pretty volatile overall intraday session, and that intraday kind of crazy trading action is never inherently bullish. So it does kind of confirm our lower high and lower low premise here as the market appears to possibly be weakening externally. Internally, stocks look really good, so we kind of have some mixed signals out there. But overall, as we can clearly see here, the NASDAQ is still trending higher above the 50-day moving average, and overall, there's really not a ton to worry about in that index. More importantly was the Russell 2000. The Russell 2000 broke below the 50-day moving average quite hard, thus telling us to go ahead and reinitiate a larger position in TWM. Sadly, unfortunately, we got a little shaky shake and got shaken out of our position on the 29th. So we sold it all on, not sold it all, but we sold half of what we had in TWM total on Friday morning. And then on Friday morning, we failed opening up below the 50-day moving average and then closing below the 50-day moving average, closing at 10.1090, which is below the 10.13 open on the 28th for a new series of lower lows and lower highs. This therefore means that we will be adding back 5% or putting 5% of our account capital in both of the accounts that I run, the risk on, risk off accounts. 5% of my account capital will be placed in a TWM. And the thing is they're like, well, don't you feel stupid for just buying it and then selling what you bought and then buying it all back the next day? No, because sometimes that's how it happens. Sometimes you don't break through the 50-day moving average so cleanly. And you see back here, that kind of happened a little bit back here, went right back below it, you rebroke back out and you went back below it. If we go back below the 50-day moving average, we have so many long positions that would be excellent for our long positions. If we don't, we're getting heavy enough hedge that as we pare back our long positions, our hedges will increase and we should be able to make money if we do start to trend. And speaking of that, decreasing long positions, RVLT is selling off below the 50-day moving average on above average volume. That is yet another, or actually it's actually only the second above average volume sell off below the 50-day moving average, but it's now the fifth total heavier volume overall sell off day since the 19th, as the 20th and the 21st had overall heavy volume. The 23rd, though, it was below average. The 28th, and then finally on Friday. So RVLT is a full sell. Also CGG, absolute terrible failure. So CGG is a full sell, and MATX is a full sell because not because it's just closing below the 50-day moving average, but because it's also closing below the lows of what appeared to be pretty solid, strong support in July and August. So the fact that it's breaking below those lows and closing below the 50-day moving average, the volume ticking up above average, we're going to go ahead and leave with what we have left in the gains, which is only 1%, and after commissions, what, 0.5, 0.86%, something like that. So overall, not that good. And also GSIT, heavier volume, closed below the 20-day moving average. That's going to be a 50% sell here. And then also UEIC closing below the 50-day moving average. That is a 25% sell. QCore closing below the 20-day moving average before producing any significant gains. That is a 25% sell. WST, its first close below the 50-day moving average since we went long. So that is a 25% sell. SGNT closing below the 50-day moving average. That also is a 25% sell, but we're still long because overall, as you can see, we still have gains from the day that we went long. So as long as that happens, we can't sell all of it. So we'll continue to see how SGNT wants to behave. And that is it for the sells. And TWM we already went over. Also, just to let you know, on Friday my buy stops on data were hit and my buy stops on MDSO were hit. Unfortunately, and this is not something you want to necessarily see, it hasn't failed yet, but from where my buy stop was to where it closed, data is like down 10 cents and MDSO is down like 10 cents for me from where my orders are filled. Obviously, when your buy stop gets hit, You want to see it go right through your buy stop and just keep on going. So the fact that data in MDSO didn't continue to go is a little bit of a concern, but overall the charts look really solid and the volume was heavy on both stocks as they move through those lines. The biggest problem out there, what was I looking at? I should have taken notes before I did this, but I did not. There was a successful straddle play on Friday. Krispy Kreme donuts. Straddle was initiated by not me. I did not take this position, but our expert options player in the chat room took a straddle on Krispy Kreme, and it did pay off ever so slightly. It worked. It just didn't work great. So KKD was successful, but overall this week was pretty lame whenever it comes to stocks. Straddle plays were okay, not great. Buy stops aren't really working. New longs aren't working. And speaking of that, Yelp, for some odd reason, my market order in Yelp was canceled, and I did not go long Yelp. So what I will do now, since that is the case, I will once again set up a buy stop order, which I had on the book before it triggered a buyable signal on Thursday. But the mere fact that I didn't get filled and yet it closed down 3.38% makes me kind of lucky. And now I can go ahead and wait for it to actually eclipse. Let me move that line. I want to show you where I want that line right here. Have it close above here. So I'll go ahead and put my buy stop a little bit above 53.80, 54 area. But we're going to go ahead and wrap it up there. Enjoy your one extra day off this Monday. I'll see everyone on Tuesday.